Welcome back to the program. To some breaking news, the local share market has plummeted in dramatic fashion at the open this morning. Let's go live to our business reporter, Chris Kohler.
And Chris, how bad was it on the market?
Yeah, look, yesterday was the worst day so far this year. Today is a whole lot worse. So far this week, we're looking like we've lost almost $100 billion off the ASX 200. Now, as I speak to you, the local market is down around 2.6% to 6,467.3 points. That's 173 points coming off at the open this morning. So this is obviously very significant losses today. It's pretty much red across the board. Looking first at the miners, down significantly. BHP and Rio Tinto down around 1.5%. Fortescue Metals down 2.8%. The big four banks losing more than 2% each. Energy stocks coming off quite significantly following an oil price drop overnight. And look, it's a similar story elsewhere in the market. Really, this fits into a global sell-off following a ratcheting up of the US-China trade war situation. Obviously, just recently, Donald Trump introduced a 10% tariff on an additional $300 billion worth of Chinese imports. Now, that has been met with retaliation from China, and these are the sorts of settings that really stress out markets. Now, Wall Street fell sharply overnight with the FANG stocks, the tech stocks, the real growth stocks there, losing around $150 billion US between the five of them. That's obviously spread right through into the Australian market now, as I mentioned, down significantly both today and yesterday.
The interesting thing is, Chris, is that from my view, and I'm not a markets expert, but what surprises me is that this has taken so long, because we've known the instability around the trade deal has been around for some time. There hasn't been, I think, a lot of optimism around it. So, yeah, I mean, it seems obvious that this was going to happen while the two biggest economies in the world are having a massive trade row.
Yeah, absolutely, Kieran. I totally agree with you. And the reality is the situation has been sort of at least bubbling away for some time. But ever since the meeting in Japan, things have been kind of pretty background a little bit. You know, Robert Lighthizer, a trade representative from the US, went over to China, and there were 3 days' worth of face-to-face trade talks, and the market was kind of thinking, oh, maybe we're going to see some positive news in the end. And that just got blown out of the water by this additional 10%. Now, pretty much all imports from China into the US are now have tariffs applied to them. And the thing is that the situation could get a whole lot worse. The 10% could become 25%, according to Donald Trump. And now China has hit back with well, what could be argued, and what is being argued by the US, as currency manipulation, with the yuan now trading at more than 7 Chinese yuan to the US dollar. That's a 10-year low. And also China directing its own representatives not to buy any more US agricultural products. So the situation has scope to get worse. And I think the reminder of that is what's really driving this volatility, and this reminder that, oh no, things are actually pretty devastating. And also, just recently, we've been hitting record highs on the local and international markets on Wall Street as well. So the theory is that there is some froth that can be knocked off here.
So just on that point, when you say it does have scope to get worse, what is the outlook for the ASX? Is this going to level off today, or should people be bracing for worst?
Well, that's a good question. I'm not actually sure where we're going to end up at the close, but certainly 2.7% is the worst session. If it stays at this level, it'll be the worst session for some years, really. And as I mentioned to you, it was only last week on Tuesday that we were talking about record highs on the local market. So really, there is some scope for things to get a bit worse, and the losses being pretty much across the board. You're seeing investors heading for the hills at these levels. Now, there's really nowhere to hide right now. You can't really go offshore to other global markets because they're also in sell-off territory. But because the interest rates around the world are at record lows, that has driven people into the share market for a yield. They're looking for ways to make a return on their money, which they can't get for bank deposits right now. So they've been looking at shares, and so now you've got investors basically scratching their head, well, going, where can I get a reliable and a safe return? So this is dicey times for investors.